Welcome to Buy, Hold, Sell. I'm Ben Clark, and today I've got with me Romano Salatena from Katana and Michael Wayne from Medallion. And today we're going to be talking a bit about earnings season. Stocks that typically beat expectations in earnings season will go on to outperform the broader market for the next few months. So we want to have a look at some of them that have done that to date. Romano, I'll start with you. The biggest company on the market, Commonwealth Bank. Buy, hold or sell?
Yeah, look, as a hold, I mean, leading in the expectations were so low for the whole banking sector and especially Commonwealth Bank there. It's all about reading sentiment in our mind. We think we're past peak bad news flow. The yield's okay, credit growth's okay. They're trading at about a 30% discount to the long-term average. For us, it's a hold.
Michael, I mean, it was a chaotic year for the bank, but the market's actually reacted well to the result through it. Buy, hold or sell?
Look, for us, it's actually a sell along with the rest of the banking space. Although the numbers are better than expected, the key metrics of net profit, revenue, net interest margins, return on equity are all in decline, and it's hard to see things improving in the immediate term. Over the last 30 years, we've had interest rates come down consecutive years after year. We've had a big explosion in credit. Housing prices have gone through the roof. We're now up against a completely different scenario. And I think the banks are going to have to transition their mentality away from a sales focus to a more compliance and risk management focus. And it's very difficult to maintain business momentum when you're going through those changes. So it's a sell for us, although high quality organisation, the metrics aren't moving in the right direction.
Okay, let's stay in the financials. Magellan, I think, has had one of the best reactions we've seen to date. Is that a buy, hold or sell?
It's actually a hold for us. It's our preferred pick in the diversified financial space, but you've got to think of the global environment at the moment. Equity markets are, again, mid to late cycle. We've already seen a derating of PEs for the diversified financial space as bond yields move higher and interest rates move higher globally. So for us, we just feel as though the market has appreciated a very good result, but there are some headwinds out there into the future. But there's no denying that we like the business dynamics for these sorts of companies, very scalable businesses. As funds under management increase, your management fees increase, your performance fees potentially increase. So they're very favourable metrics that we like, but just given the recent run-up in price, it's a hold.
Okay, Romano, I mean, the fundies are actually really out of favour at the moment, which is what was maybe more surprising about a 14% kick up in the Magellan share price on the day. Are you a buyer of this one?
Yeah, look, I mean, the numbers were 10% ahead of consensus. I think the kick on the day was really largely due to the dividend. Yeah. And that's a bit of a sugar hit because, you're at 90-95% payout ratio. You haven't got much room to move there. So I think that's one thing. But looking beyond that, with fund managers, we keep it really simple. We follow the flows. And Magellan's growing their fund from 65 to 70 billion over the period. A lot of it was good margin, sticky retail money. For us, it's a buy, and we'll continue to buy that until we see the fund reverse. When we see the fund reverse, then we'll reconsider our position.
Okay, now let's go into gaming, because this has actually also been a tricky area. The Chinese gamblers fled the market. The casino stocks have been doing it tough, but Crown had a really good kick up on its result. Is that a buy or hold, sell?
It's a hold. I mean, it was a good result, a really good result. And we like to see them put more money into buybacks. There's worse things they can do than throw $400 million into buying back shares. That's a good thing. The yield's good, balance sheet's good, got tier one assets, so lots of like. They are trading at a 30% premium to Star Entertainment Group though. So for us, that sort of pulls it back and puts it in the hold category.
Okay. And Michael, in some ways this company's gone through what Commonwealth Bank's been through. It's sold off a lot of arms. It's replenished the balance sheet. It's now a much simpler business. Are you a buyer of this one?
No, we would hold on this company. Very good quality assets, very high quality business, but we just think that things are a bit mixed at the moment, particularly with the domestic operations, which now, as you say, makes up 95% of earnings. We saw a very good result out of Melbourne. Perth continues to struggle, although the economy over in Perth is slowly recovering. That should help things. But focusing on the VIP gaming, we did see a big bounce back in VIP gaming. However, what drives that, we think, comes from what's going on in China. And at the moment, we're seeing a depreciation in the renminbi. We're seeing the property market start to cool in China. We think that will affect the VIP gaming. So we're happy to hold it because it's a very good business, but we just think there are a few headwinds challenging their growth profile looking out 1-2 years.
Okay. Now we've had quite a number of results drop. Have you got one that I haven't brought up, a good beat that you think could go on to outperform over the next few months?
Yeah, look, CSL again delivered a very, very strong result across all the key metrics. Margins are expected to continue to expand. The blood plasma business, their core business, continues to thrive in a space at the moment which is very, very challenged globally. But CSL's size, history, scale has enabled them to thrive in that environment, win even more market share. It does look expensive by traditional PE metrics, for instance. However, you have to take into account that they account for their research and development straight away, and rather than sort of spreading out over the years. So it actually makes their earnings, or depresses their earnings somewhat. So we think that this business is actually looking a lot healthier on the value metrics, considering its growth profile, than many people give it credit for. So that's another one we would happily buy even at these high levels.
Okay, and Romano, I mean, there's actually been quite a lot of positive reactions to share price. Seems to be quite a few beats. Can you single one out for us?
Yeah, I think the one we really single out is MinRes, Mineral Resources. It was a modest beat this year, but if you look at analyst numbers 1 and 2 years out, we think it's going to be a huge beat. So if you sit here today thinking, where do I invest the next 12 months, that's the one for us. If you take a quick step back, in 2007 they listed at $38 million EBITDA. They've just announced, $507 million EBITDA, just over a decade on. On our numbers, on our internal modelling, we're forecasting a 20% uplift in EBITDA this year, and then a 55% uplift the following year as lithium hydroxide comes on production. So, if you're sitting here today thinking, where do I see a beat coming up, I think that's the one for us.
Okay. Well, you want to be looking for beats in reporting season, and there's some good ideas there for you.